Steve Liesman for the details. Steve.
Thank you, Tyler. The minutes from the January meeting show that Fed officials saw the monetary policy rate at likely the peak of this hiking cycle. But these minutes are full of concern about upside risk to inflation. While they saw the risks moving into better balance, the committee was still more concerned with inflation risk. Important to note, this meeting came before those upside surprises we saw to the inflation numbers, the data we got in February for the month of January. Some were concerned that inflation progress could stall. Most participants emphasized the risk of cutting rates too quickly. Only a couple pointed to downside economic risks from keeping rates restrictive for too long. They thought it was appropriate to begin discussion of slowing and ending balance sheet reduction at the next meeting, but no particular timetable for when that might end. A few saw the runoff continuing for some time even after beginning to cut interest rates. The committee remained concerned that elevated inflation was still harming American households. They noted improvements in inflation, headline and core. Some saw key indicators like housing inflation would fall in the future. But participants saw upside inflation risk in stronger demand. They saw it in loosening financial conditions, along with geopolitical risks and the possibility that the inflation improvement we've seen, some better supply chains, could begin to moderate. So that effect of that's been bringing down inflation could go away. There were a few folks that saw concern or saw pressure on consumers, but that was really not the basis of the discussion. And Tyler, I'll just leave it there, except to say again, before these worse inflation numbers came in January, the Fed still had this bias of concern about inflation, still pointing out its inflation measures had not reached 2%. And that was why I think the chair at the meeting had that hawkish tilt and why even the statement itself did. Tyler?
So the numbers that came out after the meeting and after this, after this commentary, I suppose you would say. Do you think the fact that those numbers did come in hotter than normal hardens the view of these, I will call them inflation hawks, just because it's convenient?
Yeah, I think that's a good way to put it, Tyler. I think that they're saying that, you know what, the caution that we had in the January meeting makes sense in light of the numbers. It underpins, it supports our position. You know, you say inflation hawks, Tyler. I'm having a hard time reading these minutes and finding any doves on the committee. Maybe a couple, but not a whole lot.
Yeah, and they seem more worried about inflation. They see the upside in inflation risk is more worrisome than the other side.
By a long way.
And you didn't see any sort of commentary agitating for quicker, more dramatic pace of rate cuts.
A couple throwaway lines, Tyler, like concern about pressure on consumers from elevated delinquencies, perhaps in the buy now, pay later. But it's very interesting, Tyler. They keep saying things are coming into better balance, but they clearly don't see it as balance. They clearly see still an upside inflation concern. That is evident in these minutes.
Is there quickly a possibility of a rate hike this year based on what you're reading there?
I don't think so. I think the committee believes at this point it's restrictive, and above the restrictive level, it probably needs to bring inflation down. At least that's the feeling of the committee now. There wasn't any discussion at all in these minutes. Haven't really heard it much from other Fed officials, though they have. Even the chair has acknowledged the possibility that it could happen. But I think the response to data not coming in the way they want it to, Tyler, is likely to be holding longer at these restrictive levels rather than raising again.
Very interesting. Steve, thank you very much. Appreciate it.
Pleasure.
Steve Liesman reporting.